Hello, welcome from Trend Signal for our review of the data and events the week beginning the 1st of August. New month, post-Brexit, ANCS recovery for global equities sort of continues. The FTSE 100 and 250, in fact the 250 put on about 1,000 points in July, up 6.2%. Certainly matching, if not beating, its pre-Brexit levels. The FTSE 100 is well past that now, 405 points higher from its pre-Brexit levels. So you think all is well, but it's not completely well, of course. There's quite a split within the indices, those that are doing well with the currency depreciation and those that are going to be struggling, airliners, travel groups, house builders, banks, etc. Anyway, let's have a look at what is coming out this week. So just click on our Forex calendar. It's non-farm payroll week, the first week of the new month, signals that data. Always very important. Non-farm payroll, probably one of the most important data releases of the calendar month, ranking alongside the monthly Federal Reserve meetings held by the FOMC. Employment's key because it's one of the Federal Reserve's mandates, so has a direct impact on monetary policy. So that'll affect, obviously, equities, currencies, bonds, and to a lesser extent, commodities. In fact, looking at the calendar as we are here, you'll see that it's a very busy week with manufacturing and services, PMIs, Bank of England, and non-farm payroll. So let's just have a look at what's coming out in this first week in August. Monday, we're already half through Monday, but there's a couple of bank holidays in Switzerland and Canada, although they won't hamper volumes at all. We've already had a bit of a miss on the manufacturing PMI from China, and a rather disappointing manufacturing PMI from the UK as well, 48.2, 49.1, which I suspect will be part of the argument that the Monetary Policy Committee will use on Thursday for changing monetary policy, and hopefully a cut in rates will be following on Thursday. Tuesday, we have construction PMI out in the UK. This is probably another important bit of data that will help convince the MPC to cut rates. Particularly weak data last month, as you can see, 46, and we're expecting an even worse reading this month of 44.2. Anything below 50 is in contraction, so you can see the construction sector is particularly weak. Moving on to Wednesday, we have the services reading, so that's in sterling, the services PMI. And services are a lot more important than manufacturing. It accounts for about 80% of the UK output, so that reading will be closely watched. Bit of a slump last month, but we're not expecting a worse reading. 47.4 is exactly the same reading as last month. And then we have the ADP non-farm employment change. This is a private payroll company that has a good insight into the number of people employed or not because of the work they do with private companies. It is less reliable than the official data from the Bureau of Labour Statistics on Friday, but it will affect the market. So 1:15 on Wednesday is something to watch for. Then on 3 o'clock in the afternoon on Wednesday, we have the ISM non-manufacturing PMI. A lot of letters, a lot of weird meaning, but it's the Institute of Supply Management. Non-manufacturing, we call that services here in the UK, so it's the services sector, PMI, and we're looking at a reasonably good number. In fact, manufacturing and services in the US doing rather well, only slightly lower than the pretty strong reading in July. And then we have the crude oil inventories. In light of the 6% slump in crude oil last week, following some fairly poor inventory data, this will be watched quite closely on Wednesday afternoon at 3:30. We then go to Thursday. That's the big day for sterling markets, really. It's the MPC meeting to consider monetary policy. Carney and the committee backed away from any action last month, which surprised many, actually. But the latest business consumer surveys and the first reading on manufacturing PMI that we had on Monday morning do suggest that the MPC will be spurred into action. We expect a rate cut, along with many commentators, including Forex Factory, a rate cut from 0.5% to 0.25%, and there is a possibility that there could be an announcement on another round of quantitative easing. It's been 50 billion purchase of sovereign bonds has been mooted, although that's quite speculative at this stage. The BOE will also release its quarterly inflation report. So this is all sort of merged into one, as had been the case for several months now, including the minutes of the same meeting. The quarterly report is likely to revise downward the inflation rate, and also looking at a cut in our growth targets as well, although it's not as dramatic as you'd expect. HSBC think this year's estimate will be reduced to 1.7% from 2%, which was the forecast in May. So I think not bad particularly. Anyway, it's an important day nevertheless for the sterling markets, 12 o'clock, and Carney is speaking at 12:30, and those are the words that will also likely move the markets. The official announcement at midday is the thing that will cause an immediate announcement, and then there'll be further comments from Carney, which will also have an effect on the markets. Friday takes us to the main event of the week, certainly for global markets, which is the non-farm employment change, NFP for short. We're expecting a pullback from the incredible number the previous month of 287,000, although that was as a result of the month prior to that, where the data was particularly poor. So the 3-month average is looking sort of pretty much as you'd expect. 180,000 jobs created in July is the expectation. The unemployment rate is actually ticking down a little bit. Not as you'd expect with a number like that. It's normally down to the number of people entering or leaving the jobs market. But anyway, a very positive number there, 4.8%, which is normally the headline that grabs people's attention. So all in all, pretty good data. Will it be enough to push the Fed to raise rates in September? I don't think they'll be doing it then. And with the election in November, the likelihood is that if the Fed are going to raise rates just once this year, it'll probably be in December, where the probability is sort of hovering around 40% and has been improving really over the last 3 weeks as the Brexit angst has sort of subsided a little bit, and markets have recovered. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.